It's a bear. Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Back up into our 80-degree weather here. Still a lovely day out there, and hope you're having a lovely, beautiful day as well. If you don't know who I am and this is your first time watching, I own a brick and mortar store here in Lauderdale by the Sea. It's a live camera, actually, right down the street from the pier, which is 2 blocks from me. So if you follow my Skippy hand right here, I like that Skippy hand, and you went a couple more blocks that way, I am on the right-hand side. Been in the same location since 1995. My experience goes back, and I've been doing this full-time since, no, part-time. I started in 77, working for my father. Second-generation dealer. My father's done this for a living as well, and I do my own thing now, but I opened this store in 1995 in LBTS. Love this little town, love the business, and love my customers as well. Let's move along to today's topic, which is kind of, let me get out of this big screen first here, and let's see where we go from here. Well, what's up next? Exactly, right? Where do we go from here? What's up next? Well, in order to know what's up next, we're going to talk about, we're going to show a couple graphs today. People like graphs, and it's really simple. I'm going to show you the simplest, for anybody that's really concerned that they may have made a mistake in buying precious metals, or for the people whining about, I shouldn't have bought it, I bought it at the high. And there are people that have bought as high as over 2,000 gold, 2,100. We were selling people gold last summer. Last summer for about up in that 2,100 range when you figure the premiums in. And I'm sure there's some people out there that are a little concerned. They saw the market go down to 1695, what it was last month or something like that, touch down the 1700 levels, sit down there and it just work its way back up to 1850 and almost that 19 range. I think we did hit the 19 range, didn't we? And then monkey hammered down during the Fed speak last week. When the central bankers open their mouths, usually the damage is done, or has already been done before that. But this was all central banks doing, and hammering the price of commodities in the secretively, and doing it and through back doors, using banks to do it, obviously, bullion banks to do it, and other central bankers to do it, or not other bankers to do it for them. But again, big monkey hammering that drove the prices down to where they are right now. We're not Friday. We could see some more lower prices. I don't see any abnormal strength in it right now, but it's kind of like good opportunity to buy, as I said. These provide great buying opportunities. And as I said, for anybody that's worried about this market right now, relax. Relax. I'm going to show you something that's just going to calm your heart down and calm your nerves down, and you'll, after I show you this, you'll say, I'm not worried at all. But again, it depends on how long you're going to live for. That's a big question. And some of you know where I'm going with this already. Let's take a look at gold prices today, up a little bit. And what the coins say, a bear. Coin did say a bear today. I went back to the old coin just because, I don't know, it's got some flat edges I thought might be throwing it off a little bit, and it's not perfect. The coin is definitely imperfect. But you know what? I tried the new coin yesterday, and I just like stick to old things like that. So I use the old coin, and the coin did show a bear today. But it does look like we're up somewhat. Again, the coin is just for fun, as I always say. 1782.88. I'm going to do a quick refresh. I haven't refreshed in about 10 minutes here. Let's just kind of see if she's staying in that same level. No, up a little tiny bit more here. 1783.53, and the ranges last night were 1777 to 1787. And again, we're a little bit below that high we hit last night. But the lows are higher than the past lows, and the new highs. Well, yesterday I think we saw a high of 1790, so we're in a range right now. And we're going to just be climbing the ladder back up again, no doubt about that. But someone will take out a few rungs from us on our trip upwards, that's for sure. There'll be some more monkey hammering. Don't forget that, but it won't last long. And again, provides good opportunity to buy the dips, and for the rest of us just to kind of sit back and say, there they go, doing it again. Silver, $25.96 currently, range $25.78 to $26. So we're back in that $26 mark, and we'll just crank it. Again, same thing. It'll just keep marching up again. Oddly enough, we're getting towards the end of June. Does this, with the Fed speak and the end of June month, I mean, it's kind of like a witching hour, isn't it? With Basel III, and then the dollar index kind of moving up a little bit, and treasuries, what were they, about 1.5? It's kind of like a perfect little storm here to knock prices down artificially. Let's take a look at platinum here, 1,092, below that $1,100 mark. What a buy platinum is. Man, oh man, I just can't believe how cheap it is. And we sell very little of it. It's really surprising. Most people buy gold of late. We've sold tons of silver for years and years. And for what it's worth, you know, when you see prices going down, you would think that you'd see capitulation in physical metals. Uh, the funny thing is for years and years, I mean, I think since 2016, I haven't seen very many big physical sellers. I mean, a few here and there, but we've seen mostly buyers in the physical market. So when I see these big downs like last week, $100 plus down week, I'm wondering who's selling that gold? Where is that? It's certainly not small and medium-sized investors. That's for damn sure. It's obviously, I think it's just big paper trades. Again, manipulation, monkey hammering. And as a friend of mine told me long ago, they can only control that so long before it gets stuck up their asses. And that's exactly what's going to happen. So just take advantage of it. Look at it as an opportunity to buy, or just wait it out. And let's move over here to the charts, what I was talking about. Yeah, you know, I'm going to show you the simplest chart that's going to tell you not to worry. Let's just look at this right here. All years. Look at the all years chart. Now, how far does that go back? It goes back to 1917, but I'm sure if we took this chart and we went back even further, that's like about 1913 is when the Fed took over, isn't it? June 1915. That's an odd place to start the chart. But no less, take a look at this chart, folks, and you'll see that there is 1980, 79, 80 for those of you that lived through that market right there. There's the very bottom of the market. There is the top of the market. But if you were to take this line and stretch it out, let me see if I can do that somehow. Inflation adjusted. There we go. Log scale. I'm going to remove the log scale and inflation adjusted, and we'll keep recessions in there. But if you take a look at the log scale, not inflation adjusted, I know this chart looks a little funky and it may not be, you know, exactly what I'm talking about, but I kind of want to show you why you don't have to worry, because overall the long-term effect is upwards. The long term is upwards on precious metals. Again, take away the inflation adjusted, take a look at this chart. Just up. It's up and up and up over a period of time. That's why I keep telling you, don't worry about it. Gold and silver is a matter of wealth preservation. Which would you have rather been holding on to for this whole time here from 1975? Whether you started holding on from buying and stacking since, you know, you're an old-time stacker, or whether you started stacking in the 80s, or whether you started stacking in the 90s. I mean, the overall trend for this chart is up. Let's just turn on inflation adjusted and turn that log scale back on. And again, take a look at, I like macro trend charts. I've told you that many times before. If you like charts, macro trends is really good. They give you a lot of little options here. 10-year daily chart, which is kind of cool. By year, by president. That's kind of, look, Joe Biden, Donald Trump, Barack Obama. Barack Obama years weren't too good for gold and silver, but that has nothing really to do with Barack Obama. It's just kind of interesting. By Fed chair, I don't think I've ever looked at this one. Jerome Powell, Yellen, Ben Bernanke. Look at this. This is pretty crazy. All of them, helicopter money is MMT or whatever the hell they call it, bailing out bad banks. You know, I think Yellen is the least of the worst out here, if there's such a thing. But you know, the central bankers are kind of stuck in this situation. They have really no choice. By recession, 2020. There's a 2020 recession. A pretty cool chart here, actually, if you get a chance. Go to macro trends and play around with this a little bit. And as I've always told you, I encourage you to learn this stuff for your own, so you'll have more fun and you'll learn more by coming to the site and looking for yourself. But as I said, the long-term trend for precious metals is up overall. So, you know, that's what's next, if you really think about it. Now, if you got some kind of issues, health issues or something like that, and you're not going to be on Earth for a long period of time, and you've got to get your stuff in order here. You know, if you're in your high 70s, high 80s, and I'm not saying that's old or anything like that, but you know, that's when you start thinking about, well, what is next, and at what point do I need to sell this stuff, or do I pass it along to my children? And again, we talked about that a week or two ago on a show I called, you know, having a plan. You know, what's your plan? But let me go back. If you're a younger person, you know, if you're if you're younger, man, it's a no-brainer putting the stuff away at all. Even if we see the big down here, it's just a no-brainer. Keep stacking, especially if you're under 50 years old. Just keep stacking your ass away. So just my opinion here. Oh, 1 second here. Let me move that up. And let's see here. We'll move on to the next thing. Oh, we already talked about spot prices here. Let's move into the gold to silver ratio 100-year historical chart. Oh, I'm sorry. No, I just talked about that. Sorry, got myself thrown off a little bit. It looks like I had, the gold to silver ratio. Yeah, that's what I want to talk about next. Interestingly enough, we haven't talked about the gold to silver ratio in a little while, but I just did it. It was like 68 point something. Where is it? 68 point, as of this morning, 68.76. I mean, that kind of puts us in this, see where my arrow is right here on the high side of this. But if we go back to 1986, this is kind of the average. It looks like if you're kind of like average that line out, we're in the average of the gold and silver ratio right now. You know, when it gets way out of whack, you know, like for example, gold and silver ratio last year got as high as 120 to 1 at one point. I remember doing some videos about that, and we were talking about the disparity there, and was gold too high or was silver too cheap? Well, apparently silver was too cheap and gold was too high. They ended up coming back and kind of coming back into that nominal, or that 68 to 70 to 1 period. Again, another good chart here. Just curious, let's turn off log scale. Not a big difference there really on a log scale. Show recessions. As I said, macro trends, great for charts and such. I think you'll really enjoy it. Let's take a look at the news here. Not too much. Couple after the smash by Sprott. And, you know, I kind of read the article. I'm really not going to go over it. He just kind of talks about interest rates and yields and stuff, and how the dollar index went up and had an effect on gold. What he doesn't talk about, Eric Sprott doesn't talk about, is the monkey hammering and the manipulation done by, or at least in that article he did. I don't know if he normally does or ever does, but he doesn't talk about the government manipulating the price of gold, silver, or gold primarily. And let's take a look at Gold Slam here, the levels to watch for by Phoenix Capital. Mostly a chart kind of deal here, where he's looking at charts. And here, I'll show you. Again, not too much I'm going to get into, a little technical stuff. I like charts. Charts are cool. They tell you where you've been and where you might go, but they work until they don't. It's like a lucky coin. Let's take a look at, oh, hold on, I told you I was going to finish up with zero hedge. Gold gets slammed. Again, not too much to read here, but if you read ZH, and you can read it for free, you may want to read these articles. How much longer can silver price be suppressed? And that's in Andrew McGuire and Craig Hemke. I think Hemke's a Sprott guy as well. Let's kind of look through the news here and see if there's any black swans. There's a big potential black swan right there. Russian Black Sea Fleet warship fired warning shots near British destroyer. You know, again, the potential black swans we talk about for precious metals. You know, if this blew up right here, and all of a sudden you had some kind of shooting going on between Russia and UK, or Russia and NATO, watch out, man. Gold and silver prices are just going to go insane. Again, black swan type events. Other stuff in here, not so important at all. Let me take a look here. Futures flat as traders wait for next green light from Fed. You know, as we talked about in yesterday's show, it's pretty sad when entire markets rely on what a person says and what they don't say. You know, it's kind of like we talked about many times about Elon opening his mouth and cryptos either going one way or another. Same thing when it comes to equity markets and gold and silver. You know, gold and silver markets and other markets that are denominated in U.S. dollars. You know, we're kind of stuck with that. So when Powell speaks or the Fed speaks, something crazy happens, and that's not the way real markets should run. That's just a highly manipulated market. But they're kind of screwed. The Fed's screwed right now. They're in a rock and a hard place. They have nowhere to go. All they can do is jawbone this whole thing and hope that people fall for it. But you know, I think the game's up for them. I think it's you know, it's not the game up like Armageddon, and you know, we're all going to be trading our gold and silver coins for bread and stuff like that. That's never going to happen. But when I say it's all over, I just think that the dollar inflation is going to get real ugly here in the future. I think we're into another inflationary super cycle. This is, you know, some of this might be transitory or transition, you know, from 2020, and I believe that's absolutely true. However, overall, excuse me, you can say that the stuff that was affected by the closures in 2020 is going to have an effect on markets, and when more and more product comes out, factories start opening up more and more and production is higher, you're definitely going to see prices come down on some things because of availability and such, but no less, the elephant in the room, excuse me, I'm going to take a sip of coffee, my throat's a little dry here. I talk too much. The elephant in the room is the amount of money they're printing. They're stating the obvious. Most all these financial experts and everything in the Fed, they're stating the obvious. Yeah, the closures, put a damper on production for sure. People were closed for a year. A lot of people had produced no products at all. And that will have an effect. And once the products start coming out, prices would decline or should decline as long as there's still competition out there for some of these folks and they can produce enough of it. But prices should decline in a lot of those areas. But like I said, the elephant in the room is the amount of money they're printing, the amount of money they put out there. And the elephant in the room that nobody discusses that, much less this. And what's the next thing? This is the de-dollarization of China and Russia and a lot of these other countries. I mean, look at Nicaragua, not Nicaragua, who was it? Nicaragua, one of those countries, just went to crypto. Gosh, I should remember. We did the article earlier this week. Honduras or something went to or declared Bitcoin legal tender. And again, you Bitcoin folks know who that is. But that's de-dollarization, folks, because that country also accepts U.S. dollars as legal tender, too. Now they're accepting crypto. That's competition to the dollar. And as I said in yesterday's video, bankers hate competition. That was a big circle, wasn't it? Let's move here from, looks like Warren Buffett resigned from the Gates Foundation board. That's not a surprise. That should be illegal right there. And again, nothing here too much. This is kind of interesting, nothing to do with precious metals, but a guy woke up to find a mistake. He had $1.1 trillion in his Coinbase account. Does that officially make him the richest man in the world? I think so, at least for a day, even if it was a mistake. And he didn't keep it, obviously. He'd be the most wanted man in the world if he kept it. Let's see here. What else? Not too much. Power. Speaking of finances and speaking of electronic digital assets, whether you get your money online or through a ATM machine or whether you're in cryptos. What happens if the power's off? What happens if you have no power? California's having that issue right now. They've got some big problems with their power out there. Well, of course, us folks in Florida are very familiar with that because the one advantage of fiat dollar bills is that during hurricanes you can actually go buy goods with a fiat dollar bill. You cannot buy it with an ATM card, a credit card, or cryptos. So that stuff is pretty much not available to you. You can't even do a transfer from your bank account because you got no electricity and internet. But the beauty of fiat dollars, man, I hate to even saying that, again, is during emergency times like that. So I think we're always going to have fiat dollars around. I believe that in worst case scenarios, emergency situations, power outage, internet outages, national disasters, that type of thing, that it's national power outage. I believe that there's an important role to play for fiat dollars. I'd rather have our currency, U.S. currency, backed by gold or silver or something. But there is an advantage to that is, again, at least with dollar bills, you can go down to the local store and buy some food with it. You're not going to be able to do that with your silver and gold coins. And even Germany, during their hyperinflationary period, where a mark was worth like 100 million mark was worth like a penny or something like that, even during their hyperinflationary periods, people that own gold and silver and that had that wealth preservation and had the foresight to own precious metals, they would take their gold, silver, and whatever else they had to trade and go down to the local gold buyer, silver buyer, pawn shop to sell their diamond ring, and they would trade it for more. I wouldn't, by the way, I wouldn't invest in diamonds, that's for sure, but they would trade it for more fiat currency, the fiat marks. And then they'd go out and buy food with the marks, and the extra marks they bought. So as far as any folks out there that think that you need to own precious metals so that you can barter with it, I don't think so, man. I don't think that's ever going to happen. Maybe I'll do a show on that one day as well. Let's move on to gata.org, the best website out there. The guys that know the most about how the markets are manipulated and who does it, who the players are, and all that stuff. So if you're a first-time watcher of this show, if you don't have gata.org on your bookmarks bar, then you really don't know what's going on out there, and that's the truth. And that's the truth. We've already read some of this. Craig Hemke, again, we saw that in the ZH article. Sometimes they run similar articles. I think Craig Hemke is a Sprott guy as well. After the smash, rising debt, negative rates still support metals. We just talked about that, so I won't go in that. This is kind of funny. The Federal Reserve, yes, the Federal Reserve, just, where is it? Here. They just made 60-second animated videos. Look, Federal Reserve Bank of Cleveland, Inflation 101. Isn't this funny that they just came out with this? I think they did. And they explain inflation using what? Lego people. That's how they view us, folks. They view us as Lego people. Talking plastic Lego people. Well, or they view us as children. Obviously, it's probably more they view us as children. You know, Inflation 101 using Legos. Come on, that's embarrassing. But I guess, Americans, for the most part, and most people in the whole world, are pretty much economically ignorant. Even people that think they know economics, they're pretty much ignorant. So this is how the Fed views us, especially the Federal Bank of Cleveland views us as children, obviously, here. I haven't watched any of these, so if you get a chance and you want to, go to Inflation 101 by the Federal Reserve Bank of Cleveland and watch the cartoons they're giving us to teach us. Isn't that wonderful? Oh, clickbait. Whoa, man. I threw this in a little bit earlier. I saw this, and of course there was a guy fishing here. I was more interested in the fishing dude here than the clickbait, and that's not quite true. Clickbait, why did I put this up here? Because it's kind of interesting. I'm looking around on YouTube the other day, and I was looking at different gold and silver precious metals bloggers or video people like myself talking about precious metals. Some of them coming from the like the Sprott guys, coming from the paper, where you own paper, you don't really own physical. They call it allocated, but you still don't own it. They're still third party. Sprott, as much as I like them, even though my account is worth half as much, and I can't figure out why. I talked about that yesterday. My fault for not understanding how Sprott works. It's not an ounce for an ounce. If you hold Sprott long enough and you just keep a certain amount of money in there, chances are, gosh, I want to explain exactly what I said yesterday so I don't sound like I'm hating on them or anything like that. But I bought Sprott years and years ago when silver was like $14 to $16 an ounce. And I thought Sprott closely followed silver 1 ounce to 1 ounce, but obviously it didn't. I recently looked at my account, and my bad, because I didn't understand how they work, my bad for not understanding that it doesn't work like that. My Sprott account is worth about half of what I thought it should have been if it was 1-to-1. So I called to ask them how that worked, and they weren't able to. No, I wasn't able to understand it. So again, I got into an investment. So before you get into Sprott allocated accounts, make sure you understand what you're buying. Again, I'm not saying anything bad about it at all. And actually, I like the Sprott. I like the things they talk about. But they're selling a product as well. But understand what you're buying. You're not buying an ounce of silver there. They talk about allocated and unallocated, and they always talk about how great allocated accounts are. But again, you're not buying a 1-for-1 there. You don't own an ounce of silver when you're buying with Sprott. And that's what I thought when I originally opened up my account there. But I was sorely wrong. Completely my bad, folks. The lesson and the moral of that story is know what you're doing before you buy something, because I obviously didn't. What was my little thumbnail back here? Clickbait. I'm looking at all the different. I'm looking at my videos now. I'm thinking, well, I hope I'm not getting into that clickbaity thing. Titles are really, really important and I'd like to hear from some of you other YouTubers what your comments and thoughts are. But titles are really, really important out in YouTube world, and because you got to get people to interested in clicking your video and watching it, and my intent is get all my local people in South Florida watching my videos like a daily TV show. I'm just kidding. But the point is to get people to watch your videos, and I noticed that a lot of other videos out there, man, they put numbers up. It seemed real clickbaity, and then you click the video, and there's nothing in the video about what they put on there, like $10,000 silver. You say exclamation, exclamation, exclamation. Then they don't talk about it at all, or it's not even close to what they were insinuating. And I always worry about doing this myself, so I don't even know why I brought this topic up, but I was looking at yesterday's video, which I thought had really good content in it. Banks hate competition. And I was noticing the low views. And then I have some videos here, gold, silver, 27, silver is 1500. And again, remember I was talking about clickbait. I wasn't saying that gold's going to hit 27 or did or anything like that. I was just talking about the charts and taking inflation adjusted numbers and what gold would be equivalent to $1980 or something like that. I almost forget the video, but I fully explain what that is. But yesterday's video was kind of interesting. We talked about banks hate competition, kind of the same thing I was talking about a little bit today. And I'd like to thank everybody here that was watching and says hey and all that stuff. I have crypto as well. Buy the fear and sell the news. Max Stack made an interesting comment of the many examples of banking and news working together. Eugene Mayer tops the list. 1917, Managing Director of the U.S. War Finance Commission, 1930-1933. Fifth Chair of the Federal Reserve, 1946 President of the World Bank. 1933, buys the Washington Post. And then he acquires the Washington, L.A. Times and conglomerate. And that's kind of what I was talking to you yesterday about. And great point, Mac. I didn't really know about this gentleman, but if you listen to corporate news about gold, silver, and precious metals, you're going to go broke because they're not, first off, they don't know what they're talking about for the most part, and they're not working in your better interest. And if you know corporate news, it's a single narrative. They all kind of share a single narrative. There may be a flavor of that narrative, a blue or a red flavor, but generally it's a single narrative. Thanks for watching, Mac. I really appreciate that. And all you other folks that watch, I was just kind of looking at some of the comments here. Donald Robinson says that 1980 silver prices would be $273. Prices comparable difficult due to recent unknown rates of paper currency creation. Yeah. So 1980 high silver price of $50 would probably be equivalent to at least, as Don says here, $273 today. So we still haven't hit that high in silver quite as of yet. Best products out there, folks, are still any gold products you can pay no more than $100 an ounce premium for, in my opinion, unless you have to, unless you're kind of stuck and that's the only thing that's available. But meanwhile, keep your search for your local coin stores and your local bullion dealers. Try to keep in that $60 to $85 range premium, and that's mostly going to be for bars. Your coins are going to be in that $100 to $150 range for sure. Gold Eagles are still too pricey, in my opinion, as well. However, it looks like Gold Eagles, there's guys out there pre-selling them in that $150 to $160 range, but their pre-sales are not immediate pickups, and that's the online guys. As I always, hold on, silver too. What's the best deals in silver? Anything that you can not pay more than a $6 ounce premium for. Try to stay in that $4 to $5 an ounce premium, again, for recognizable known products. That's mostly bars right now. Great deal out there is 90% U.S. constitutional silver. We have that for sale for starting at $4.25 an ounce per ounce premium over the spot price. I think that's cheaper than the big online sellers. And no tax too in Florida. Even if you buy $1 worth, there's no sales tax on it. Completely exempt from sales tax in Florida. And that's really about it, folks. This is, buy local. As I said, we advertise locally. I don't sell online, folks, so I can't ship anything out. So, if you're looking to buy from me and you don't live in my area, unfortunately, I can't work with you. But I do encourage you to find your own local dealer, even if you have to drive an hour or two to keep it in your state. Buy local. Spend the money there. Keep it local. Don't send your money out of the state. And besides, at some point, you're going to need to find someone to sell the stuff to. So you need to develop that relationship now, or find someone that, when gold and silver peaks and bubbles, and I'm telling you, we're in a bubble, you should probably sell some of it, that you have a place that you can run to and sell it. So that's important as well. Even if you're not buying from the local dealer, you need a place to sell this stuff, a fair place. Well, that's it. This is Brian Kuzma with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Thanks for watching. And if you got any questions and you live in my area, please call me between 10 and 4, Mondays through Fridays. Happy to help you out. If you don't live in my area, please leave a comment below and I'll see if I can answer it. Hey, thanks for watching again. Have a great day.